today. To everybody, I would like to welcome you again to the channel. Ang ating lesson for today, as per requested ng ating mga students, ay this is an accounting webinar, all about partnership formation. Partnership formation. So we will be dealing with the accounting for the formation of a partnership form of business. So without further ado, we would like to give you some points in order for you to better understand what really partnership really means. So let's see. Partnership. This is a mere agreement between two or more persons to contribute money, property, and industry to a common fund with the intention of dividing profits among themselves. So, ang partnership can be formed by mere agreement. So, this is letter A. So, with just a mere consent between or among individuals, as long as all the elements of a partnership are present, so meron kagad partnership, no need for writings, whatever, basta may mere agreement lang ay may partnership na. But we have letter B. If the partnership capital is 3,000 or more, so at this point meron ng money or meron ng value in the amount of money up to 3,000 pesos or more. It should be in public instrument. So whatever item or property or asset is involved with the amount of 3,000 or more, dapat merong black and white, merong tinatawag na in writing, in public instrument. It should be in writing. And at the same time, if the formation of the partnership will involve property amounting to 5,000 pesos or more, it should be registered na sa SEC. Kung ang contribution ay mag-i-involve ng isang property, a property which will amount 5,000 pesos or more, so that will be the time ng partnership ay dapat marehistro sa government body, particularly sa SEC. So here are some of the terminologies or some points to remember when it comes to partnership accounting. So we really have to understand what are these forms of partnership. We have the general partnership where all the partners have unlimited liability for all the business debts. So it means to say na up to their personal property, they can be sued by the creditors. When an event happened wherein the partnership suffered a loss and still there are unpaid creditors, it will be their what we call the right to look after the personal properties of the general partners, because the creditors are always protected when it comes to liabilities of the partnership. That's what we mean by general partnership. Limited partnership, the second one, Partnership where the partners have limited liabilities. A limited partnership should have at least one general partner. So, the word it says, the word limited means up to their a certain level of their contribution, ang kanilang accountability, no? Kasi limited partner sila. But a limited partnership should have at least one. No, if they have three partners, at least yung one ay general partner. No, not all of them can become a limited partners. No, they are the partnership is called limited partnership, but the members or the partners of a limited partnership, no, should have at least one of them is a limited or a general partner. Okay, limited liability partnership, type of partnership that displays some elements of a partnership in a corporation. The partners are not liable for the another partner's misconduct or negligence. So it is just partnership which uh, displays the characteristic of a corporation, no? Very limited ang kanilang liability, no? Because what the corporation says, the stockholders of a corporation are limited only up to their contribution. So that is the characteristic of a limited liability partnership. Okay, de jure partnership formed and sanctioned officially by complying with all the requirements in its formation. The jure partnership is what we call the full-fledged partnership. No, everything is complete. They have complied with the legal requirement whatsoever, all the documents and all the other uh, compliance uh, requirements are being followed. So, de jure partnership. Okay? De facto partnership naman. No? It is a partnership. But since they have not officially complied with the requirements, no, they are called de facto. They are not really illegal. They are de facto. They are legal partnership, but they are de facto in the sense that they haven't complied yet with the requirement. So de facto pa sila. Once they complied with the requirement, magiging de jure na sila. Okay, what is a general partner? A general partner is partner with unlimited liability. Ito yung kahit personal na ari-arian niya ay kayang uh, uh, makuha, no, in favor of the creditor, no, as long as it is a creditor, no, yung tinatawag natin na this is a legal procedure, no, to get even up to the personal property of the general partner. Limited partners, no, partner whose liability, no, just up to their partnership contribution or investment. Partner by Stoffel, no, anybody, no, that represent himself as a partner and yet the original or the bona fide partners do not contest, no, to the fact that they have another partner, no, representing the partnership. So pumapayag sila na i-represent sila ng isang tao. Although, yung tao na yun ay hindi naman talaga partner, pinapayagan nila. So, yun ay tinatawag na partner by estoppel, no? Kaya, siya ay nagiging isang partner. Although sabi niya, ako ay partner ng ABC company, ng ABC partnership. Although wala naman talagang ABC partnership, but by the fact na nakapag-transact siya, no, he becomes a partner by estoppel because uh, naging partner siya ng isang pinakilala niyang partnership without anybody contradicting, no, against his claim as a partner. Okay? Silent partner, one who contributes to the partnership but it's not actively it's not really active, no, in the participation of the management, no. Ang tawag sa kanya ay silent partner, or another one is dormant partner. Okay, secret partner who is not known to the public that he is a partner, but he participates in the business affairs of the business. So internally, siya ay partner, but in the eyes of the public, no, nobody knows na siya ay partner. So secret partner siya. So again, ang ating topic ngayon ay we have to this. Okay, good morning, good afternoon, and good evening to all the followers dito sa channel natin, ano. Ito na naman tayo, si Mr. Accountant, no. Ang ating topic ngayon ay partnership, accounting, more particularly, we will be focusing, actually, if ever, it will be the part 1 of this session, no? Sole proprietorship to a partnership. This is presented to you as per request ng ating mga minamahal na mga students, mga accountancy students. So, this topic is one of the, siyempre, laging very controversial kasi whether we like it or not, this is part of your curriculum, part of the accountancy curriculum, and we will always take this up as we go along sa ating accountancy course. So, just to give you some information or to add more knowledge sa inyo, we will discuss some points dito sa ating partnership accounting. So actually, to start with, partnership is a form of business, This is a form wherein two or more individuals agree to, which is another term, which means bind themselves to contribute money, property, industry to a common fund with the intention of dividing profits among themselves. So, with that, by just a mere agreement, there will be a partnership, At except for some uh, instance wherein kailangan ito ay nasa black and white or in writing, ano, kailan ito dapat na nasa papel, no? If the amount of the or amount involved in the partnership contribution is 3,000 pesos or more, no? It should be in public instrument. Okay? And another one, if in the process of contribution ay it involves a property that will amount to 5,000 pesos or more, so the partnership formation should be, aside from the fact na ito ay nasa writing, ito ay dapat nakarehistro sa SEC. So those are some points ano na mai-share natin. But in this case, ano, we will be focusing more on the accounting aspect of the topic. So once again, to start with, the best way, to discuss this is to solve one particular uh, problem or one particular event that will involve partnership accounting. So again, sole proprietorship. That means to say there is an existing business wherein an owner operates his own business. A sole proprietor, no? Sabi nga natin, ang sole proprietorship is a business owned and operated by only one individual. So, ang kanyang purpose dito ay i-convert ito sa partnership. Paano niya gagawin yon? Mag-invite siya ng kanyang mga partners. So, ang ating focus ay how to handle it, no, in terms of accounting, no, paano natin siya i-account. So, let's go to solve the problem. At the same time, ay mai-discuss natin yung proper accounting for this situation and a particular event. Okay? So, let's go. So, ito yung case natin, ano? This is a simple case para lang magkaroon tayo ng idea how to handle this type of event. So, proprietorship to partnership. Okay. So, ang situation ay pinakitaan tayo ng balance sheet, no? Financial position, no? I'm sorry, no, kung pangalan ko na lang nilagay ko dito. No, as of July 31, 2021, ano, the FS of Jerry Cerudo CPA shows the following assets and liabilities. Okay, we have cash 2,500, no, accounts receivable, another asset 10,000, merchandise inventory 15,000, furniture and fixtures 18, and we have the sole liability accounts payable 6,000. So, in this case, no, bibigyan ko kayo ng idea para magkaroon ka ng idea kung magkano ang capital. So, you just have to sum up all the assets less yung nag-iisa na liability, no, na 6,000. So, you will get the capital balance. That's part of the problem kasi, no, to to add some twist to the problem. Bibigay yung asset, bibigay yung liability, yung capital hindi. So, bibigyan ka ng idea para makuha mo yung capital, total assets minus liabilities para makuha mo yung capital. Okay, we will continue. It is estimated that 5% of the account receivable may prove uncollectible. Merchandise inventory includes obsolete items costing to 5,000, of which 2,000 might still be realized. Okay? Depreciation has not been recorded. The furniture and fixtures are 2 years old and have estimated life of 10 years and would cost 20,000 pesos if currently purchased. So, ang ating situation ay si Mr. Balix ay ating i-invite or maybe interested to be one of our partners. If ever. So, Mr. Balix is to be admitted upon its investment of 20,000 cash and 10,000 worth of merchandise. Okay, points to remember. Pagka ikaw ay form ng partnership, unang-una mong isipin, all the item must be adjusted, to its fair market value at the time of the formation, Dapat sila ay nasa fair market value. Ang valuation nila ay nasa fair market value. So, in this case, sabi nila, naniniwala sila, na ang receivable dapat ay nasa fair market value. Kaya, they believe na kailangang recognize ng 5% allowance or shall we say may uncollectibility na 5%. So, yan ay ating i-recognize. Okay? So, another one, explain natin yung mga information na binigay. Yung sa merchandise naman, naniniwala sila na obsolete or subject for impairment, sabi nila impairment, obsolete ang 5,000 worth, but of which naniniwala sila na hindi naman ganun pa ka-obsolete yung worth na 2,000. So in this case, ang confirmed na obsolete ay the net amount of 3,000 because they believe that 2,000 might still be realized or pwede pang merong mabawi, pwede pang makarecover ng 2,000 out of 5,000. Next one, yung depreciation natin, ang depreciation, this is a system wherein we recognize the expired portion of the fixed assets, This is a systematic allocation of the expenses, yung expired portion ng ating fixed assets. Ang fixed asset natin dito ay yung furniture and fixture, hindi pa raw nade-depreciate, Ang age ng ating fixtures, furniture and fixtures is 2 years old na siya, pero hindi pa siya nare-recognize, so unadjusted siya. And in the process, ang kanyang estimated useful life ay 10 years, if ever adjusted or if ever depreciated, it should have been 2 years old na dapat na depreciate but not yet, at this point, na ang basis ay 10 years useful life. But, sabi nga natin, we always consider yung ating mga commercial valuation. Sabi, ang kanyang current, cost if ever purchased today, yung situation o condition ng furniture and fixtures, 20,000 siya. So, yun ang tinatawag nating, fair market value. So, we should always remember ano ang role na gagampanan ng fair market value, So, yun na. Then, Mr. Balix is to be admitted upon the investment of 20,000 cash, at face value, siyempre ang cash. Ang tawag, tatanungin ka, ano ang measurement when it comes to cash? Cash is recorded at its face value. At yung naman 10,000, as it is stated here, ang 10,000, we assume that it is at its fair market value, 10,000 pesos worth of merchandise. Okay? So, meron tayong 4 choices dito, Sorry if ever hindi na i-include. So, tayo na maglalagay. So, the total assets, upon the formation of the partnership, no? Lalagay natin. Would amount to, oh sorry, would amount to, yun, ano, mga choices natin dito. So, A, 70,500, 48,000, 67,500, and 74,000. So, meron lang tayong choice just to no, to check, no, the accuracy or the, uh, if we did the right thing, no, kaya meron choices dito. But at the same time, we will demonstrate to you how are we going to do it, that we would arrive at the correct information, ano? Okay. So, ang ating unang procedure na gagawin, ano, we will have to adjust the balances of the FS as per given information. So, based sa information ng mga binigay dito, ang ating mga adjustment. So, start with our first information, no? Debit, the capital amount or the capital account of 500 pesos and credit to allowance for bad debts. That is the 5% of your 10,000. So, try to understand and try to analyze, ano, that is the first information. 5% of the existing account receivable is 500. It is a debit to capital and a credit to allowance. We all know that the allowance is the contra account of the account receivable, and this is a deduction from the outstanding balance, and it would result to the net realizable value of the accounts receivable. Okay, letter B, another debit to capital, 3,000, and credit to merchandise inventory. Ito yung sinasabing obsolete yung 5,000, and yet 2,000 might still be realized. So, the net amount is 3,000. Debit capital, 3,000. Credit merchandise inventory to decrease the inventory. Sabi natin, bakit laging affected ang capital? Because we are trying to adjust na yung mga balances ng ating FS, and everything, it would finally, or the final analysis, it would be the ultimate is an effect to the capital account. So, dalawa na yung debit natin, ano, sa capital. Okay, letter C, another debit to capital, 3,600. So, how did we arrive at 3,600? So, ito yung explanation natin. Take up the depreciation for 2 years. That is 18,000 divided by 10 times 2 years. That is 3,600. No? To take up the depreciation for 2 years para ma-update natin yung book value ng furniture and fixture. Ito muna gagawin mo. So, na-arrive mo na yung book value. Ang book value niya ay 18,000 minus 3,600. That is 14,400. And at the same time, binigay ang kanyang fair market value 20,000. We will now update the fixed asset to its fair market value. So, at this point, 14,400 na ang book value ng ating fixed asset. And we will bring it to the fair market value amount. So, this is a debit to furniture and fixture, 5,600. Para from 14,400, that is 18,000 minus 3,600, 14,400, bring natin siya to its fair market value. We will add, no, as an adjustment to furniture and fixture, 5,600. And the effect is a credit to the capital account, 5,600. Okay? So, 20,000 na ang ating fair market value as given sa information, no? That is credit to capital 5,600. Okay, to give you an analysis, no? Ng ating beginning capital balance ay 39,500. That is the total asset of 45,500 minus liability of 6,000. That is 39,500. So the adjustments will be plotted here. No? Yung adjustment A, negative 500. Yung nakita nyo kanina rito, no? Debit. When it is a debit to capital, deduction. When it is a credit to capital, that is an addition. So B, 3,000, negative again, it is a debit to capital. C, another debit to capital, 3,500 or 3,600, sorry. And a debit, a credit to capital of 5,600, and the net adjustment, no? This is what we call the net adjustment. Yan. The overall effect ng mga adjustment is a negative 1,500. So, ang adjusted capital balance, no, ng proprietorship business, ano, at this point, proprietorship business pa siya, 38,000. So, the question here is how much is the total asset? So, ang nakuha natin capital. So, madali nating makuha ang asset. We just add the total liabilities at makukuha na natin ang adjusted assets. Ang adjusted assets natin ay 44,000 because of the equation, asset minus liabilities equals equity. And in this point, meron tayong equity, i-add lang natin yung liability, nakuha na natin yung asset. So, since si Balix ay mag-i-invest daw ng worth 30,000 of assets, that is 20,000 cash and 10,000 merchandise, so ang total nun ay 30. So, if we add the investment of the new partner, we will have the total asset upon the formation of the partnership in the amount of 74,000. That's how we do it. Now, this is now the financial statement of the new partnership. Let's say the partnership is Cerudo Balix Partnership, and we will give you the FS, the Statement of Financial Position as of July 31, 2021. We have the total assets, 74,000, as we had in the computation, comprising of the account receivable, the outstanding balance. This is the outstanding balance, 10,000. But this is the net realizable value of 9,500. The cash amount is 22,500. The merchandise inventory is 22,000. You just check it by getting the debits and the credits dito sa adjustments, para makuha mo ang ending balances ng mga accounts. So, 22,000 ang inventory, furnitures and fixtures, 20,000, and the total assets of 74,000. The loan liability is 6,000, and the capital of Cerudo Capital is 38,000, and the new partner, Mr. Balix, 30,000 with the total capital amount of 68, and combined together the total liabilities and partners capital of 74,000. So, excuse me, that is the total liabilities and partners, Lagay natin dito, that is your partners equity. Okay. So, 74,000. So, that's how we do it, This is just a simple illustration of the formation of a partnership from a proprietorship business, ano? Okay. So, for the part 2 of this, we will be having uh, two proprietorship business forming into a partnership. So, at this point, we would just like to say uh, goodbye for now and see you in the part 2 of this topic. So, see you around for the part 2 of this particular topic, partnership accounting. See you again and watch out for the part 2. Thank you very much.